Hello everyone, happy Wednesday. I hope you guys had an amazing day. Not to, you know what? Let me make an introduction. In today's video, we're going to talk about the stock market, the SPY, the NASDAQ, the IWM. We're going to take a look at the VIX, the bonds, the yields, how everything is correlated, and the next steps for what is going to end up happening in the market. All right, so without further ado, let's get started with the video. All right, first things first. I made two YouTube thumbnails, extremely bearish YouTube thumbnails. You think I would just randomly do that just for... No, it's because I thought the market was going to fall. And look at exactly what ended up happening. I was saying we were looking at all of the topping signals. We were looking at how everything was pointed at a downward move. And that's exactly what ended up happening. We've been talking about this for quite some time, and it worked out perfectly. So basically now, the next steps are basically we need to see whether this is going to continue, what the next optimal buy points are going to be, what the next steps. All right. So right off the bat, we see an obvious big move to the downside. All right. Just basically to be pretty quick about the video, right? I don't want to make it too long, but essentially what is happening here, we basically fell to 391. We held 390, right? Pragmatically, we could continue falling lower tomorrow, right? But ideally, as bears, or if you want to be bearish, you want to try to go short at levels of resistance. So at most here, I think we could get a bounce back up to 394 to 395, basically around the zone here. And from here, that would basically create a bear flag, right? And then from here, we can continue lower. This is, seasonality. We looked at the seasonality chart. We saw how towards the end of January, we usually get a pullback into the market. And it's sort of like clockwork, right? But obviously, not everything works perfectly, but it's, it's nice that it did work out in our favor this time around. So in my opinion, if this is going to be a justified move to the downside, we can see at least 394 to 395. And to make it even more here, we can create a Fibonacci of this candle. And basically, generally, if we get a break and close above, sorry, I hope this is visible to everybody. I'm not at my normal setup, but basically, if we get a break and close above the 618% fib, then generally, if we are creating a bear flag and we get a close above the 618% Fibonacci level, then the bear flag is basically invalidated. So what we want to see ideally is we don't want to see the 38.2 or the 50% fib get breached. The most bearish scenario would be if we just retrace to the 38.2 or the 23.6 and then continue falling lower. All right, I hope that made sense. And similarly, we can take a look at the NASDAQ. So on the NASDAQ, obviously we have another break, and everything obviously has also broken the uptrend level that we were looking at, but it's very, very risky to just go short into this hole. Ideally, right, it's better not to be a late bear, in my opinion, on anything in the market right now. It was so much safer to basically be going short into strength than it is to just expect that the momentum lower is going to continue. And if you weren't short at all and you wanted to basically try to enter short, you would need to have it with a small position size. You can't aggressively go short after clear-cut weakness, especially after a big move away from this uptrend level, etc. So my thought process is that we should get some sort of a rebound, a bounce back up on, maybe, right? It would be a safer opportunity to go short on a rebound. So similarly to the SPY, as we were looking at, the 394, 395 level, I'm looking at the 279 to 280 level on the NASDAQ for, a bounce back. And for people that weren't short, you can basically, see if we can go short there. and for a continued move to the downside. But thankfully, we were going short on the IWM, and I was trying to tell you guys to lean bearish. So yeah, essentially the NASDAQ, I feel like 279, 280 is going to be a level that we can get a rebound bounce to. And basically, when we take a look at the IWM, yeah, so when we take a look at the IWM here, big move to the downside. And yeah, so similar, we should get a bit of a bounce maybe. So I'm looking at the 185, 186 level to re-short. But even that, I mean, that very well might not necessarily happen. And you know, all of these signals were just pointing to a really, really good technical short, man. That's why it's good not to overthink positions. It's not worth it. And it doesn't make any sense to think that extreme buying pressure is going to continue. Similarly, when we see big moves to the downside, it doesn't make sense to continuously be bearish into extreme strength. It makes sense to lean long, to start to lean a bit long as more and more extreme weakness occurs. All right, so yeah, I mean, the IWM, it would be ideal for a bounce back up to 185, 186 level on the IWM. But now what is very, very interesting is I want to take a look at the bonds and then the yields. All right, so we can clearly see that the 30-year bonds, basically, the bonds have a correlated relationship with the overall market. So if the bonds are doing well, then the market should also continue doing well. All right. Now, we can clearly see that the bonds had a very high and it closed above the swing high here, right? It's not perfectly correlated on the day. The bonds usually have a bit of a lag time. And there were times in the past, while we were making these videos, when, you know, in the past year and a half, when the bonds were perfectly correlated with the market. So if the market was green like this, if the bonds were green like this, then the stock market was super green as well. But this is definitely bullish because we closed above the swing high recently at 131. So I mean, essentially we just need to see if this move can continue upwards, and if we get a break and close above these highs here, then I think that this move in the bonds can start correlating more into the stock market. But at the moment, we see that there's a divide, obviously, in terms of equities and the bond market. But then now when we take a look at the 10-year yield, you can take a look at the 10-year or the 2-year, but the 10-year yield gives better, basically, bottoming signals. So, for example, over here, when especially outside of the Bollinger Bands, so it's much more correlated to the overall market, and we can use the yields as another way to gauge extreme downside or upside pressure. So, for example, on December 7th, when we were trading outside of the lower level of the Bollinger Band on the US 10-year yield, this marked a bottom in the stock market, and the market ended up bouncing. So this is a good signal when we're trading outside of the lower level of the bands, right? But currently, we can clearly see that the lower level of the bands on the 10-year yield is pointed straight down. So there is, from that perspective, in terms of the Bollinger Bands, there's a lot more room to fall lower. And if there's a lot more room to fall lower on the yields, then there's technically a lot more room to fall lower in the overall stock market. So that is something that we have to take into consideration. And I mean, like I said, like it makes sense to lean bearish, even if like the stock market ends up bouncing to 394, 395. We could get a bit of a pullback up, and then we could just end up going short again. So yeah, the yields are also showing weakness. And when you take a look at the MACD is just pointed completely down. The RSI looks garbage as well. So it's sort of tough to start leaning bullish just yet on the market. All right, it makes more sense to just wait and not overextend yourself to anything. Now, when taking a look at the dollar, I was mentioning how the dollar was very close and how it was basically 2 days away from crossing above on the MACD. All right, and we know that the dollar generally has a inverse relationship to the market. So if the dollar is rising, then the stock market should be falling. And this momentum that we see in the MACD, we should cross above tomorrow. I would be very surprised if we don't cross above tomorrow. But basically, we should cross above tomorrow on the dollar, on the MACD. And then once we cross above, generally, we should have 2 more days at least where the MACD continues up. So if the MACD continues up, there's a good likelihood that we have a few more days of strength on the dollar. And if we have a few more days of strength on the dollar, once again, if the dollar is going up, then the stock market should be falling lower. So it's not perfect, but with the dollar rising like this, with the yields showing weakness, with the bonds clearly not as correlated to the market just yet, and I think the bonds need to break above that 132 level for that strength to start reciprocating into the market. With all those things going on at the moment, we haven't even taken a look at the VIX. So very, very quickly, very similar to the dollar. Basically, the dollar and the VIX, the MACD looks very, very similar. All right, so it's the same concept. If the VIX is rising, then the stock market should be falling. So with the VIX rising like this, all right, with the MACD indicator showing upside momentum here, right, clearly showing green moves to the upside, and the RSI is about to break above the 40 SMA, then once again, this should correlate to a few more days. Once we cross above, this should correlate to a bit more strength to the upside in the VIX. And if the VIX is showing strength, then the stock market is going to show weakness. All right. So there you have it. It's, that's basically all there is to it. I mean, if we just have to take it one day at a time, we're on the right side of the trade. It's way too early to be blindingly bullish. It doesn't make any sense to try to catch any dips. Maybe tomorrow. It's going to be interesting. So basically, my thought process is tomorrow, depending on how futures open and depending on how the price action is for futures. In terms of day trading, the momentum is still bearish, right? It's going to be very, very like in the first hour and a half, we can go against the overall trend, but unless we start closing and breaking above the SPY, if the SPY ends up breaking above 395, 396, then it becomes a bit more difficult to be extremely bearish, right? But what we want to see is the SPY fail at 394 to 395. Once that happens, we can just basically lean short the whole day, honestly, because the overall momentum of the market off of that move is very, very strong to the downside. I mean, it's very tough to look at I mean, it's something that I would do, but it's very, very tough to just look at this big move to the downside and be like, okay, time to buy long. It's very unintelligent. It doesn't make any sense. The odds are not in your favor. The overall momentum is still down. The MACD indicator is pointing completely down here. The RSI is about to cross down below. And similar, when we have a cross above on the MACD, it's bullish. When we're about to have a cross below on the MACD, it's very bearish. And generally, when we cross below, we still have a few more days of downside potential afterward. So the price action could be basically like this while the MACD is still falling. So, that would be pretty interesting. And then, maybe we might have like a falling wedge. We could go long and who knows. But yeah, it would be, ideal to just basically lean short. I'm saying this ahead of time. But knowing me, we're going to try to catch some bottoms. But yeah, I hope you guys enjoyed today's video. I hope you guys had a wonderful day overall. Yeah, I hope this video works. It's going to suck if it doesn't. But yeah, I'm not in my usual setup. But if you guys enjoyed, Please make sure to like, comment, subscribe, do all that good stuff. I really appreciate you guys, and I will see you guys tomorrow. Thank you.